Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it whites of their eyes, because this market reminds me of that quote from that American officer at, I think it was the Battle of Bunker Hill in the Revolutionary War, where he said, "Do not fire until you see the whites of their eyes." And so as this market has pulled back in this vicious bear market rally, 2-week rally, waiting to turn and go short, whether you buy puts or going short in the market, you need to wait and watch for the whites of their eyes. Wait for this thing to tell you that it's starting to roll over and break down with the price action, and then we step in. Okay, so right now, that's what I'm waiting for. It looks like a nice strong bear market rally. I mean, we're going to focus on the S&P 500 today. And then we're going to look at three of my key indicators I look at on a regular basis. And then we're going to take a check in and see what's happening with gold and silver, which have been acting very bullish. All right, so here's what happened here the last week. The Dow was up 106 points, the weakest of these three. The S&P was up 80. The NASDAQ composite up 275 points. If we go back over here to my home screen, here's what I call the moving average view of my S&P 500. It's basically just showing you the moving averages I use, the Keltner channels, the little light dotted lines in here, and then a couple of indicators. These the red vertical lines and the numbers up here, a little bit of a tease. I'm going to come back to them. January 14th, February 9th, and Friday, March 25th. We're going to go back when I talk about one of the indicators. So let's take a look at the Elliott Wave picture on the S&P 500. This is the one that I've been using now for a while. It looks to me like we have had a first strong wave move down that ended with the low in January, a snapback here into early February, which I'm labeling as Manu Wave 2, and then I'm looking for Manu Wave 3 to unfold, and it looks like possibly 1, 2 of the 5-wave structure of Manu Wave 3 to the downside. Now, I'll tell you another possibility that has crossed my mind is maybe Wave 2 isn't ending until over here, right in here. Maybe Manu Wave 2 is ending right over in here. And one thing that makes me think that is how extremely overbought we are. Like on the McClellan oscillator, we're well above 100 plus 150 for like 6 out of the last 7 days. Very, very strong move up in here. We didn't get any of that in this move right here. And we got a lot of that over here on the move to the downside, extremely oversold. And we only got 1 day down in here, which makes me think, is this move and this move just part of a bigger corrective activity, and we're really doing Wave 2 all the way over here? That's a very real possibility. I mean, let's just keep that in mind. I'm not sure which one is higher in here. Now I messed it up. There we go. All right, so that's what we're looking at in terms of the wave count on the S&P 500. Let's take a look at a couple of the indicators. Now, actually, before I go there, I know that when you look at this on a daily, here's a clear 3-wave, and here this looks like a clear 3-wave. But when you drill down and take a look at it, it doesn't matter whether you look at the 195-minute or look at the 130-minute and start looking at underneath the covers a little bit, you see a little more detail in terms of wave structure down here for Wave 1, and then a very similar type thing for wave structure for this minuet level Wave 1. But you could count this as just a 3-wave in here, which is what makes me think maybe we just got an A, B, and fleshing out a 5-wave C wave. So we'll see. There's a couple of ways to look at this. There is no doubt. But either way, whether you're counting this as the end of this wave, minuet level Wave 2, or whether you're saying, well, Wave 2 could be ending over here, either way, we're looking for the next move to be to the downside, and that's why I'm on rollover watch, okay? All right, let's take a look at a couple of our indicators. Now, I'm going to go take a look at the short-term trading index, and let me go back over here, make sure I haven't missed something. I was looking down my notes here. So here's the trend. Pretty low reading on Friday. closed at almost 0.60 when you round it, 0.5988. So 0.60, one of the lowest readings. I know I've talked about that before, but the thing that caught my eye is the 10-day moving average of it. Because look at how low the 10-day moving average got on January 14th. Got to 0.756. February 9th, got to 0.799. And then this last Friday, got to 0.815. Now, it may not be done. Maybe we're going to get another low reading. Maybe it's going to pull down, but that's why I put those notations right here. Here's the low 10-day reading right here. And then here's the low 10-day reading right here on the high in February, or very close to the high in early February. And then here we are with the highest day so far of the counter trend move here in March, okay, with 0.815. So it's going to be really, really interesting to see, do we roll over now and break down this coming week? Okay, so that is what I noticed on the trend. We'll see how much that, how close that is accurate in terms of what the price action does. Let's take a look at the high yield bond fund, because it is also saying risk off. And on Friday, after somewhat consolidating during the week, on Friday, it broke down and closed below the low, the trading range of the last 6 days. So it looks like it wants to resume and head back down to at least the bottom of the Keltner channel. And to me, the target is down over here, the low 79.88. And when you look at the weekly view, look at this. This big potential reversal candle. Well, you know, we had one that was kind of similar to that back over here the week of February 20th, and 2 weeks later we broke the low. Never got any follow through to the upside. Well, big potential reversal candle, no follow through to the upside this last week, and then now we look to be heading south. We'll see if we take out that low. I think it'll be very negative if we do. Okay, so that is the picture. And then since we're talking about the high yield and talking about interest rates, let's take a look at those 10 years. I mean, everybody's talking about all of them actually. You know, whether you're talking about, you know, 1, 2, 5, 10, 30 year, everything is moving to new highs. But man, this 10-year yield, we've had our eye on it, and it's sitting at 2.49%. Let's take a look at the, this is kind of an update from last week. We talked about this last week too. Here's the weekly view of it. It's the highest close now since the week of April 28th, 2019. So very close to 3 years. And this trend line, this longer term trend line here, we are rapidly approaching it. And, you know, that's up around 2.85. And here we are sitting at 2.49. Big, big move to the upside. I think the market is forcing the Fed's hands. I just, you know, you kind of sit back and, yeah, I'm talking about the interest rate market, okay? It seems to be, you know, basically telling the Fed, whether you like it or not, you got to do something, and maybe you haven't done enough yet. You know, it's like very tentative start, little 1/4 of a point interest rate hike with our 40-year inflation and everything else that's going on. It does make me wonder, and in the stock market, have they been sitting back saying, well, I don't know, does Chairman Powell really have the intestinal fortitude to do what he says he's going to do? Everybody's a little bit of a skeptic. So we'll see what happens, but I think the market is going to dictate. Okay, so let's take a look at gold and silver. Okay, here's a weekly view of GLD, up $3.08 for the week. So here, breaking out of that big sideways triangle that we had, and it looks like it really wants to keep pushing to the upside. We haven't taken out that high over here, 194.45, the August 2020 high, but we got very, very close 3 weeks ago. And it looks and acts like it wants to come right back and resume the push to the upside. When I look at the daily chart, here's the way I've got this labeled. And whether whether this is continuing to be, is that really, you know, intermediate wave 3 and 4, is that minor wave 1 and 2 of intermediate wave 3? We'll see how strong this gets and how far it pushes. I know when I look over and look at silver, I've labeled it a little slightly differently. I've got it as minor 1, minor 2. I'm just expecting a much bigger almost and stronger move in here for silver. Watching this trend line to see us break above through that trend line, get above 24.90 high here, and keep pushing as a part of a third primary wave to the upside. So right now, both of these are looking and acting very bullish. We need to see them continue to play according to plan. Okay, so that is the picture we've got on those two. That's it for this weekend. If you felt like the video was helpful, give it a thumbs up. And if you're not a subscriber to the channel, hit that little subscriber button. And you can also hit the little bell to get reminders. It'll give you a notification when a new video gets posted. And if you'd like more of this kind of information on a regular basis, head on over to joehenches.net. Check out the website and check out the membership. Everyone have a great week. We'll talk to you on the next video.